Have you ever entered a trade only to watch it immediately move against you? Or maybe you've been in profit, decided to let the trade run, and when you check back later, all your profit had disappeared. If you've experienced these situations, you're not alone. Most traders spend their time learning indicators, chart patterns, and trading strategies, but very few people talk about the psychological patterns that appear once real money is on the line. And in this video, I'll share with you 9 trading psychology traps that almost every trader experiences at some point. Becoming aware of these patterns won't instantly make you profitable, but it can help you recognize them before they start making your trading decisions for you. The first one I call the I entered and it instantly went against me trap. And one of the quickest ways to lose confidence is when every trade seems to move against you the moment you enter. Even if your analysis was reasonable, it's easy to start thinking, I always pick the wrong trades. Instead of judging a trade by what happens in the first few candles, remember that every strategy has losing trades. One trade rarely tells you whether the decision was good or bad. The next pattern is the I should have closed earlier trap. This one happens to almost everyone. Your trade reaches a nice profit and you hesitate, but you eventually decide to let it run because you believe it can go further. And then the market suddenly reverses. When you check later, most or all of the profit is gone. Your mind immediately says, I knew I should have closed. The problem is that you're judging your decision using information that wasn't available when you made it. Sometimes letting winners run is the correct decision, even if that particular trade reverses. The third pattern, it's a big one. It's the cutting winners short while letting losers run. And this is one of the most common emotional patterns in trading. The moment a trade shows a small profit, you feel relief. You close it immediately. But when a trade moves into a loss, you hope it will recover. So you hold it longer. Over time, this creates an unhealthy risk-to-reward ratio where you're risking, for example, $1 just to make 25 cents or 50 cents. Many traders don't lose because they can't find good entries. They lose because they manage winners and losers differently. The fourth pattern is being afraid to open the charts. Sometimes the hardest part isn't entering a trade, it's opening your trading platform, and especially after you have a losing streak. You almost don't want to know what's happening because you're expecting more bad news. That feeling is more common than many people realize. If you've experienced it, don't ignore it. It's often a sign that your emotions are starting to influence your trading. The fifth psychological trap is feeling uneasy every time you have an open trade. Some traders constantly watch every candle. Others keep checking their phone every few minutes. Why? Because having an open position creates tension. You may notice tightness in your chest, restlessness, or an urge to close the trade just to feel comfortable again. Sometimes people don't exit because the setup failed. They exit because they want the uncomfortable feeling to stop. And recognizing the difference is important. Pattern 6 is a big one, and that's turning a losing streak into self-judgment. After several losing trades, it's easy to stop criticizing the strategy and start criticizing yourself. I'm terrible at trading, I'll never get this, I'm just not cut out for it. A losing streak feels personal, but every strategy experiences losing streaks. The important question isn't, am I a bad trader? It's, did I follow my trading plan? Although if you do have a significant losing streak, then the question may be, your trading plan needs adjustment. I covered that in another video. The seventh pattern is doubling down after one loss. So basically, you lose a trade and now you want it back. So the next position is slightly bigger. Maybe you convince yourself the setup looks even better. In reality, you're often trying to recover emotionally rather than following your plan. Revenge trading is one of the quickest ways to damage an account. The eighth psychological trap is I can't possibly lose again. After 6 or 7 losses in a row, many traders start believing the next trade has to win. So they increase the position size dramatically. The problem is that markets don't know how many trades you've already lost, and each trade is independent. Changing your risk simply because of your recent results can make a difficult week much worse. And the final psychological trap is the confidence that depends on your last few trades. This is actually very subtle, and a winning streak makes you feel like you're finally figured trading out. Then a losing streak arrives, and suddenly you question everything, your strategy, your decisions, even yourself. The reality is that neither winning streaks nor losing streaks tell the whole story. What matters is whether your strategy has an edge over many trades, not just the last 5 or 10. If you've recognized yourself in several of these patterns, that doesn't necessarily mean you're incapable of trading. It means you're becoming aware of reactions that many traders experience. Awareness alone won't solve that, but it's often the first step toward making better decisions. The goal isn't to eliminate emotions completely. The goal is to recognize them before they start making your trading decisions for you. If you found this video helpful, consider subscribing for more trading psychology, Forex tutorials, and practical trading education. Thanks for watching, and I'll see you in the next video.